Blockchain is already disrupting several industries, with opportunities for radical improvement of existing business models. As trade finance is getting a lot of attention, in this video we will see how in a single letter of credit transaction, blockchain can introduce significant improvements to a lot of banking activities in addition to trade finance.
Issuing a letter of credit requires a lot of communication and exchange of documents between multiple participants around the world, including the importer, the exporter, banks, insurance companies, regulators, and even ports and customs.
Banks must check transactions history, internal and external sanction lists to ensure commitment, avoid fraud, and money laundering.
Participants must ensure regulatory compliance and provide reporting needed by their regulators, which could repeat for multiple times through the process, while regulators are required to review and consolidate the massive reporting data to ensure adherence and uncover possible fraudulent actions.
Financing a large importation transaction may require a syndicated loan agreement, in which fronting bank must communicate with lending institutions to negotiate loan terms, secure needed guarantees, manage disbursement and repayments.
On the other hand, the advising bank advises the letter of credit to the exporter, who will review the terms and conditions and may accept or require amendments.
With presentation of documents, exporter can request cash in advance from nominated bank, which has to communicate with other banks and negotiate the draft before approving the request. Issuing bank must execute payment on maturity. Treasury to ensure availability of funds in nostro accounts and make a prior transfer if necessary before sending transfer instructions to the banks holding its nostro accounts. And with the payment made, all parties must be notified again.
As a settlement of the LC payment debits the nostro account, then issuing bank's treasury must wait to receive the nostro statement from nostro bank in order to reconcile the mirror accounts with nostro accounts at their correspondence bank's site.
Blockchain smart contracts, distributed ledger technology, and consensus will provide near real-time participation and visibility to all involved parties, eliminating the need for massive amount of communication and exchange of physical documents, which will speed up the issuance and amendments of the letter of credit and decrease the errors, discrepancies, and disputes. In addition, exporters can have much faster access to short-term credit, with the added visibility and trust guaranteed by blockchain. Distributed ledger allows a bank to internally share an updated set of KYC data, along with needed transactions history, like the type of goods the customer imported before, or the destinations of wire transfers made previously. With the right privacy considerations, the model can be further extended to create globally verified blockchain identities for all participants. Globally shared and instantly updated sanction lists will cut the time and cost and help achieve near real-time AML. Being part of the business network will enable regulators and central banks of constantly monitoring transactions and fully automate analysis and investigations with the added power of blockchain identities and transaction transparency. Syndicated lending processes can be extremely simplified. With smart contracts and consensus, loan arranger and participants can have a much quicker agreement. Disbursement of loan tranches can be fully automated, and even repayments can be processed with minimal orchestration of syndicated loan arranger. With every scheduled payment, the smart contract will alert issuing bank's treasury of the upcoming commitment. On payment maturity, transfers will be executed automatically and instantly, with full visibility to all participants. Nostro accounts will be instantly updated with every transaction, eliminating the need for extra reconciliation effort and availing an enhanced liquidity monitoring and capital utilization. In a single trade finance transaction, blockchain will streamline activities in several banking areas. Distributed ledger technology, smart contracts, consensus, and verified blockchain identities will bring trust and visibility to all participants and drive a simpler, more efficient, and lower cost trade finance with reduced documentation and communication. Exporters can enjoy faster access to short-term credit. Shared KYC data and globally shared sanction lists will significantly improve compliance and help achieve real-time AML, while transaction transparency will facilitate regulators monitoring, lower fraud risks, and enable online analysis and investigation. Complex syndicated loan agreements and servicing will be extremely simplified for both agents and participants. Payment settlement will be revolutionized with automated instant transfers and immediate effortless nostro reconciliation, leading to a better liquidity control and improved capital allocation.
Leading banks and financial institutions are done exploring and already started to implement blockchain in many business areas. With new players joining every day, blockchain is already changing banking as we know it. It's not questionable anymore whether you will join or not. The question now is, when will you join?